Well, good afternoon, everyone. Scott Henderson, shooter. And hey, we're going to go over some charts, see if we can find some decent setups here today, talk about some existing ones, and maybe how we can manage this nightmare in the Middle East. Of course, at the end of our presentation, please do review our disclosure. Perfect. Okay, so I'm going to use the term market manipulation. There is absolutely no way we can have numerous hits in the Straits of Hormuz and we not be down 20 hands. We had another vessel hit this morning or this afternoon or whatever it was, depending on where you are, and we basically are not responding to that at all. So either the market is so thin or the Fed or whoever, the plunge protection team, whoever that might be, actually has such great control over the markets that we're seeing no response. That makes it very challenging for me. I like to see FOMO or fear of loss come from market participants. I don't like when markets are regulated and controlled to a point where I can't see it. If we go into the pre-market hours, we see a substantially different range than we see during regular market hours, which makes all of this extremely noisy. Now, I have a couple speed lines here. Let me just bring these up, highlight it out. So we have this kind of confirming trend support that we have. We've taken that out and put a new low in. So I'm going to come in and say we've probably readjusted to something like this as far as our look. So whenever I'm looking for three drives, so we've got our Flushing Drive 1, Flushing Drive 2. So I would think that we probably do come and back test 647 at some point, but I cannot tell you when. I do not think we take out this high. So I think we're kind of in this extended broadening formation that we're stuck in for a little while. And my thought would be it would look something very much like this as far as the structure that we have. So we could push all the way up to 713, but that's where we are. We are totally dependent on the Middle East now and how that plays out. And to be very candid, we really have absolutely no control over that. The liquidity in these contracts here are insane. I went into some QQQ puts. I don't remember if it was Monday or Tuesday. And the premium, and I realize stock's going in the opposite direction from the strike, right? And all real world premium, it's going to decline in value. Well, let me tell you, those contracts were climbing at the same rate that the stock was going up. So, going down, excuse me. So it was inverse, totally inverse as far as premium. And I've seen that in a number of pieces, which is one reason I haven't jumped in too many names here, because I can't trust the premium and I don't want to be on the wrong side and just get eaten away because there's too much volatility there. Now, let me jump to the NASDAQ. We actually look a little stronger. We haven't broke down as much as the SPY, a little more noisy. I noticed we started getting a lot of bids in on a lot of the Mag 7 names. So I look at this as kind of a breakout from where the speed line is to the upside. So that said, and the only reason I'm saying looking at the options flow, when I look at the options flow, I would say that if this trend line holds that I have here, then we probably are going to go test the high. And earnings is not bad. I don't know if you guys really have been following. Earnings has not been bad at all. Oracle was just a bat out of the park. We come out of this 617.46, then we got a shot to break this out. Till that happens, there's no reason for us to hold risk here, because there's too much of a chance to the downside. And the stones or the house of cards, we're starting to see cards fall off the building, specifically in private credit. We've had four major institutions note that they had high sales, high withdrawals in excess of their withdrawal limits. And actually, I've totaled, I think there's about 13 different names in that sector that are pulling off, which is one reason I threw that article out on that, because there's so much going on there right now that I don't see how we don't have some kind of correction or scare come out of private credit, simply with the number of loans that we have rolling over, etc. So, all right, let's look at Bitcoin. Bitcoin's gone nowhere. One of my caveats, one reason I'm not bullish at all here, is because Bitcoin has not come back. We basically have held these lows, but this doesn't look bullish here to me. We're testing the high side of that sell side imbalance or the low side of that sell side imbalance. So we could clearly reject here. Now we get down to about 56,000. Now I might get interested in chasing that long. But that's sort of my thought on this. Outside of private credit, realize crypto has been a major funding vehicle for, basically somebody makes 50% on Bitcoin. They take 20% and invest it in something else. Well, that really hasn't been the case since what now? Late October 25. So we haven't had the liquidity like we had up here coming back into the market. just because people were rolling off some gain. That's actually a big chunk of money that's not going back into the indices. And I think that's a big factor. Now, just looking over at IBIT, not much different look here. I think buyers maybe start showing up back around 35. But as far as I'm concerned, same kind of thesis here. We need to get out and above, and really, we have not changed until we get back above 55 bucks. So I think we have a long haul here, and I'm just sort of kind of trying to prep everybody in that direction. All right, let's look at some names. All right, I still like Intel here. I think we come and take out these highs. It's working. We have a confirmation of a new trend change. If you're going to hold something, this is a name I would want to hold simply for that reason. It's also on my list with AI infrastructure as far as names that we want a piece of. Cisco is done not as excited as I would like it to be. A little more noise right here, but I am getting more interested as it gets back above this 80.54. Then I do think we take out these highs. But realize in this kind of a noisy market, basically we're in World War III. I mean, not technically World War III, but from the market standpoint, if the defensive stocks aren't running like a lunatic here, the perception is this is a short-term war. And, Cisco and routing, granted, we have some data centers hit, so there's going to be some rebuild going on in the Middle East. However, I can't tell you the timeline on there. But I think Cisco is a major factor in the AI build-out. And again, like I've said before, I just don't have a good grasp on that timeline. When I do, I'll be the first one to share it. Now, TSM, I think we're heading back towards highs. My number is back to about 459. So again, this is a name I like. If we get any pullback to the 290 shelf is where I want to enter. Marvel is actually working just fine here. I think we get a little pullback maybe to about 88. And then we should head towards all-time highs. So that's a name that I like. Now, I wanted to touch base on Brookfield Asset Management. When we put in our invalidation point, reason I'm putting those there is because that's when I lose interest in the trade. That's when I want to trim and take a position off. I don't want to hold it through any kind of heat until it gets some kind of reset. And obviously we have no kind of reset here. There are going to be a lot of names in the next 6 months that have good solid setup that reject just like this. That's the challenging part. So what your job becomes is managing that risk much more aggressive. You need to know where you're wrong, where your stops are, and make sure you get the heck out of the trades as fast as you can that don't. All right, Costco, nice flag. And I think we're going to come back. We hold this shelf right here, this body of this candle. I think we come back and test the high. And Costco has absolutely been slammed. I can't get out of that place in less than an hour and 40 minutes. So I just can't imagine that we don't come back. I think this is one of the first recovery areas. However, it could get weak like the rest of retail, depending on how bad this oil crisis is. But right now, it's not a bad name even to sell some cash secured puts on. Just stay well in the money because the income's pretty decent on those options. All right, let's look at Appian. Came off the lows, got a nice back test, really a clean drive 1, drive 2, drive 3. It's giving us that little shy back test. So that is a 1. So we're pulled back any level to about the 2473. We should head back towards our 1 at about 30. Now it breaks below this shelf at 2358. I'm wrong. And this isn't done yet. Could still be a broadening formation, but considering how aggressive this flush was, I don't think so. All right, let's look at Lazard. Now, this is another reject that we had. I just want to make sure I'm highlighting these as I'm going through some names. Seriously, when I put an invalidation on a chart, basically that means don't hold the trade. And I just want to make sure I'm going to be emphasizing that a lot the next 3 months. Not that I shouldn't have done it already. It's just I think we have much higher risk of names pulling off. So the thinner the tape is, the more likely that's going to happen. All right, looking at U.S. rare earths, nice flat here. We've wicked above it. We're testing it. I think we head back to the 618 at 26 bucks from here. As far as I'd use a confirming trend support on this one. And I just like it because it's easy. That's why I like the confirming trend support. To me, it's just a no-brainer. I take it from my low. I watch my candles. I set it up, set my alert, and boom, I'm good. So in this case, you want to go to, we've now bodied above that last candle. So 50% of that candle is how I would mark it. So I'd use 1976 and this 558 as my levels for that. Let's take a look at Frog. That's really done absolutely nothing wrong. Just doing the same base. We've got our 1 here. We've got our correction. We're testing the highs. We're going to get back up. So I think there's one. This will probably get moved up just because of the breadth of this one. Let me just draw a new one right off of that leg so you get a visual. So this is our 1. This is our 2. Actually, we probably extend up to about 51, maybe a back test a little bit shy of the 382, and then we head back up for our 5, probably around that 78.6. So this isn't wrong. It's just a different visual with this degree of that wave 1, but still looks good to the upside. All right, let's take a look at some requests. Well, actually, let me flip off. Let's go back and look at a couple names here. Oracle had just a huge gap. If you haven't closed it, I would close it because we're already wicking off here. And that would be, I know they were May. If you took the Mays, close the cash secured puts, and obviously definitely close the 160 calls if you haven't. I mean, those things had a nice little pop on those. CR, SR, really has done nothing wrong. We're just sitting here. This again is my memory thesis is once we get to that stage, there's only so many memory manufacturers and we're having major shortages. So it's going to be a name like Corsair that actually just steps in and has whatever their volume capabilities are, it's going to head in the right direction. I think we do head towards highs. Takes out this 528, then I would change my mind and say, hey, maybe it's not going to go right now. And then I would want to retry it again around 479 if that's the case. EOS is just, it's broke below the invalidation line. And, obviously it's done. I don't think it's going to recover here. I mean, it will at some point, but as far as it looks to me, it's done. Quantum Scope. Actually, it's interesting right here, but I don't like is this shelf here. We back tested it right here. So I actually like this level just a tad bit lower. So you have this buy side imbalance and followed by sell side imbalance right here. And it's probably a little tighter than that as far as the look, maybe like here. So maybe at 587, just with the market weakness, I wouldn't be jumping on it unless it breaks back above this 724. All right, PDYN coming off pretty good there. It's tested, confirming trend support off of the low here. I mean, if you were measuring, you'd been out using confirmed trend. Just assume this is our trend support. We'll use the wicks in this case. So, we take out this 730. We got a nice shelf down here. I mean, it'll go back to $5 here. I would not hold below that channel. You got your test 1 here on the wick, next wick, right to it, closes below that. It likely is going to reject. And I'm saying this because you have peaking drive 1, peaking drive 2, peaking drive 3. It's pretty clean. You got some euphoria here. However, it breaks above the body of this candle at 783, then it probably continues, and I'm wrong on the count. This is 1, this is 2. And we probably get a 3 over here. All right, let's look at AMSC, American Semiconductor. Actually, decent look right off of this band. Going off the weekly on this one. Challenging part is this look. I'm thinking it's going to be extremely broad back to about $17. It's getting a nice pop, though. Really rejected price here. Rejected price right at this shelf. That's not good. So it didn't hold this shelf at $30. It's getting back into that range. I'll be surprised if it doesn't reject. I would not be interested chasing this long until we clear this 35.85 in this market. This is too noisy. Looks too much like an ABC structure. Let me just go in there as far as a corrective thing here. So you have this ABC, right? That means you'd get an ABC below there. So this would be our A. We could say that's B. Actually, let me change that. It looks more like an impulse as I'm looking at the count and doing that. So let's just assume this is our 1, this is our 2, this is our 3, this is our 4. 5 will probably come in down here, probably around 23. This just very challenging here with this noise. There's no clear confirmation of a breakout. The reason is because none of this held the bodies. When I lay out a confirmation line, I like to see the alignment between the prior bodies of the candle. So, for a confirmed breakout here, I'd want this clear above here. But since we have no body here, supports none. All we have are wicks. And what that basically means is that you had buyers and they quit, okay? You had buyers, they quit on the next candle. You had buyers, they quit. Now they're trying again, right? Chances are we don't clear this candle, they're going to give up. Then that by the end of the week, that candle will go the other direction. Okay, NEE, just equality looks lower to me. I have this set up as an ABC as far as the visual. I mean, it's in a good spot. Buyers should show up there. Buyers will likely show up at the little lower shelf at 1870. That holds, then it's got a shot. What I don't like is the way this structure looks. You got a clear impulse. 1, 2, 3, 4, 5, right? Even though Lux Algo is measuring it in a different way. So what's the likely leg here? 5, 3, 5. So whenever you have a wave 5 or 5 waves in part A, B is almost always an ABC, which we got. That's A, right? B, C, right? So it was a very euphoric A, which is okay. So this is likely our 1, our 2, And if it's only an ABC, it'll end shallow at this ledge here. So this needs to hold first, and we have no euphoria in these candles. Look at how shallow these candles are down. So we don't have a lot of buyers yet. We don't have this. We don't have that. We don't have that. So it's not ready yet. URA, uranium, this is just a long-term hold. I see no reason to pull this off. We have this kind of trend support line that shows up right here. As long as that holds, I see no reason why it shouldn't continue to head back towards the upside. So you got a little bit of room. So, maybe 46.68. I might trim, but in this scenario, I wouldn't think about that because I think we're going to head back towards the 64. If it breaks below this shelf, I would be out at 42.70. MSTR looks interesting here. Let me go to the weekly. Looks more interesting on a weekly basis, especially with this seller exhaustion right here at this shelf. It's a good spot for it to try. Okay, if you're going to enter this 118.69, I'd cut my losses and go. Doesn't confirm to the upside to 192.95. Very broad structure. MACD is crossed. RSI is still confirming here on this leg right here. This one. I don't like that. I'd rather have divergence there. So my thought is it may not be done. However, this tells me it may be done, right? The fact that these both wicked off of there, you got a lot of buyers right here. But that's the same shelf that's holding Bitcoin up. So equality to me is, maybe back down around $79. All right, let's look at NXT. Done nothing wrong. Confirming trend support. I would anchor this. All these wicks, right? I'm automatically going to move down to the wick in that scenario because I want to give it some room. So it breaks that 472. Cut your losses and run. So I'd use 112 and 472. Now, BABA, I'm going to come down to the daily on this one. Now, it totally looks bearish to me. And the reason is all these gaps. Gap up here, gap here, gap. Now we gapped. Try and take it back. We did not get above the gap. We wicked to the top of this prior gap. So that gap technically closed. Notice all these gaps we have in the other direction and how aggressive those were to the upside. Well, we should have, every stock has its MO. So if we look at the depth here of this corrective leg, it's not equal to this. So equality to me is like here, maybe 117. If this is an impulse, 3 is down around 1 or 2. So tough call. Clears this. Tough call, meaning I don't want Asia right now. I don't. That's maybe it's the geopolitical thing in the back of my mind. I got to like it for a lot of different reasons, but I also want to make sure I'm on the right side of the tape and not be on the wrong side. So, you could take a shot at a close above 139.11, but I'm pretty much going to say it's going to reject around 150 if it gets back there. It may be a viable trade in the situation where Iran gets resolved quickly and China leaves the straits or around the straits with their surveillance equipment. But from my understanding is the retail side inside China is not doing well, and that's really where BABA is going to find its support. And I just don't see this here. If you look at from the base of where our number, this is actually the most optimal spot. It's right back around 100. Plus, it's also a psychological number. All right, let's look at TAN. Actually looks decent here. The one thing I'd like to point out is that it broke confirming trend support here. So we're not in that uptrend. We're in the next leg lower kind of thing. From a channel standpoint, I see it this way. Let me go out to the weekly on this because that's where I drew that. I see this kind of broadening formation. So I really would like it back here around $49. Then we got a shot back up to the high side of the band around 71. That is a solid trade to me in this market with the dynamic. However, I could be wrong, could be done. What I don't like is this wick didn't hold. It's not bullish, fair, even though we got this pump here. And realize the supply lines, the supply chains that are relative to solar installations are going to get hit hard from the Middle East. We're going to have major disruptions ahead. All right, let's look at ARRY. I see this as an ABC corrective structure. So I think this is our A. I think we get a B, and then we get a C. I think it fills the gap, but don't really get interested until it breaks above this 886. That's just my thought. Let's take a look at run. Run doesn't look done. I think it's going to be an ending diagonal. Most likely place just from an equality standpoint, just measuring what I see here. This shelf right here is what I think holds. Now, typically it either comes right to the shelf or it's a little shallow. And I'm measuring this level right here. So I'm thinking this 922 holds. Then we get a little bit of bounce off there. Could get a reject early around 12 and then we head towards the lows, or we could bounce around in this spot too and then decide to go higher. But I do think we got one more shot lower. That's just my thought. UMAC is just a beast here. Not really, but it's doing well. All right, so confirming trend support 757 and 1798. We are seeing a little rejection here. Note equality up here. We're already hitting it, so we'll probably skirt this line, I would think. If we don't skirt this line, it's going to be aggressive and go towards 28. If we start skirting this line, that's your sign to start taking some profit, right? So anyone else have any more questions, or did I pretty much cover everything? I think I did. CoreWeave, I knew somebody was going to ask. CRWV. All right, leading diagonal on the corrective side. It's not usually you don't reject those. They make a broader pattern, but this is our 1, this is our 2, so we're putting in our 4 right now. We likely get a 5. Now I could do something like this. Leading diagonals can be shallow. You got a nice support shelf over here around 68. So I do think it rejects here. It gets into that gap, gets above 50% of the gap. Then we got a chance to get out of here because that's a big gap. And we're coming back. We got a gap back to the upside. Volume's decent, actually. MACD is crossing. It's just as noisy as the tape. I guess that's the best way to put it. Hopefully that made sense. CSU. I say that correct, Bob? Is that a fund or a stock fund? UCITS, is that the one? TSX. I don't have TSX hooked up, Bob. All right, let me see. I might see it on here, though. I got CSU, Constellation Software. Constellation, I do have it. My goodness, found it. Let me go out to the weekly on this one. Actually, nice recovery off of this ledge. Oh, let me get some fibs up on it. Got some nice upside from down here. That's for 22.94 roughly. Put in our 1, preview 4. As long as it doesn't take out the base of that shelf again. I'll mark that in just a second. Let me just draw the fibs. I would call this our 1. I would think we come back to the base right here, this base, right? And we probably put in the 5.0, head to the 618, looks good. I'd run my stop at the base of the shelf. It takes this out right here. I'd use that as it's pretty close. I'd use that as my invalidation line because that needs to hold. If it doesn't, it's weaker. I mean, yeah, you could come and move it down a little bit lower. I mean, you could come in and say, hey, I'm going to go here, use that. That's $200 though. I don't know that I'd give it that much room. Get interested right around the base of that shelf at 26.89. So, about $50, $40 from where we are now. Looks pretty good. Do you already own it?
No, not on it yet.
Okay. Any other questions? AMTX. The whole sector, I think, is shaken because of what's going on in the Middle East. Because everybody perceives a huge bottleneck, and they all, I think, whether it be AMTX or anything else. Now you would think that it would already have been running from the current price of diesel. I mean, you'd think, but it hasn't. Still done nothing wrong. I have that invalidation below 131. So, we're really in the exact same place as we were last. Now, that might be worth carrying some weekly calls. I'm not sure if they have weekly or monthly calls, like $2. Monthly's where would we be at? So let me look at that a second. Hold on. I actually like the idea of that. So AMTX, just seeing what's there as far as the options. So March 20th, you got a 150 call. That's almost worth putting some of those on. There's only 460 contracts open. I mean, it's thin. In April, you got a huge spread in April, so you really can't even go out there. It's 67% spread in April. You're already upside down. 150% for July. Sounds to me like Kirk's out there. And realize even March, I didn't see that when I first looked at it. It's got a 200% spread on there. There are 0 bids, by the way, at 15 cents. So I'm going to say that's a lot of. All right, let's look at chat. It's just, in this market, it's so hard to chase anything that's thin. It's hard enough to chase stuff that's solid. I mean, liquid. I'm watching premiums all over the place. I have runners. God knows how many names I have runners in. And every time I look at the runner, I'm like, oh, Jesus, I don't want to go there because I've watched it flip 20%. All right. Round Hill AI and Technology. Actually, good name. Nice pop off this low. Oh, then let me come out for the week. That looks pretty solid. I know I've got that marked up. So what? Yeah, I like that one. I do. 65s. Maybe. I wouldn't go too far out because you don't want to pay the premium for those. I'm just looking to see what it is. So April 65s, there's 1 open contract. Boy, how quick can you kill someone's interest? This is so good. Well, I'm not buying that. It's got a 37% premium on 67s, 36% premium on 65s. Looking what a 63 does as far as selling a put. There's 0 interest there. I mean, 0 interest on the put. You can't even get premium on selling puts. But I mean, there's nothing open from 65 and below. It's worth buying some common shares, yeah. I mean, you could do a buy right. I mean, you could. I mean, you could buy common shares, go out. Let me look at. I mean, because if you come out and sell, 70s are going to pay 290, so it's not a 40% yield. I'm just going back here. 67s pay 427. Hold on, I need to go to the calculator for that one. My mind's not that clear. So I mean, pay 420 2 months out. It's about 6.24 cents. So annualized, it's about 38%. Not a bad spot actually. Make it. That would be, I mean, unless you're wanting to hold. It really depends on what your thesis is with it, but I think we do head towards the upside. But at the same time, I'm going to go back to the general market conditions here. We have so many potential black swan events right now, it's not even funny. I mean, we have a potential credit crisis with private equity. JP Morgan Chase is taking a haircut on some stuff that they have there. Realize this has just started. So we haven't started to hear the big news. This is just the beginning of that crunch. It's going to run through 29. So that, in addition to the pressure that oil is, Japan is releasing their oil reserves, the largest release of their reserves in history. It's just, we don't need a huge amount of bad news, but we need something that shakes the market. From a short standpoint, the number that I put in there and the challenging, just being candid, I would be short Qs or SPY if the sellers were staying strong, but the buyers keep coming back in. I mean, we've been in this dip buyers market since 2022, and the fear hasn't come in to the extent where they're following through. So the names that I like, in where I posted a bunch of names. Actually, let me go down here. No, not China releasing, Japan. Well, the good news with that is it probably doesn't mean a rate hike. That's one thing that TPGO. Right now, this is in the debt wall structure. This is going to break here and head down here. So this is a name you could short. How do you short this market? You're going where the highest level of risk for continuation is, type of thing. So I'm just looking at the options on this. About a 19% premium on $40 puts in May. Probably doesn't make it's equality for me here to the downside. And I think this credit crisis in private credit gets deeper. So, realistically, we're looking at $35, $5 to the downside. It's a good name to short. The most exposed names, if you read the debt wall article, I basically listed all the high risk stuff in there. Not all the charts look well. Realize the charts that I have here, I have OBDC, BCP, PC, Wolf, and BW. Now let me just go to that's all right, Bob. No worries. All right, Wolf is an example. It's not ready to break yet. I want Wolf below 1073, then it's a short because it's going to get exposed. Realize they already have hired bankruptcy. So that's something they're going to give it up. They're not going to roll their debt. They're one of the highest risk names out there right now. Those are the good names to look. When you get the trigger to go short at 1043, that'll be a good name, but we want to wait for that. Same thing with Babcock and Wilcox. They are extremely exposed to this debt crisis. Now, challenging part is really only looks like 2 to me. So until it gets back up maybe to about 42, 47, right? Then we're going to come off and it probably takes out these lows. So I'm watching this whole sector now going into this. See, the challenging part is we have a lot of stress coming in from oil, but it hasn't really rolled through to earnings yet because we had a strong earnings cycle. So we have all this noise from all these events going on, but yet it's not really washing into the bottom line of these companies yet. And so that may be 2 or 3 quarters out. So shorting it, the only thing you can really do is do a bear put spread on names like, let me just give you one. I think the number was Nvidia was the one that I was looking at. I'm not there yet. Boy, that chart's messy. I got a lot of stuff up there, don't I? All right, see now, Nvidia is running into a wall overhead. I mean, just a wall. So it gets back up here to this resistance around 191. That's a great spot to do a bull put spread to the downside. And what you're going to do is buy a put, right, and sell a deeper one. So you're going to buy like a 187, 185, somewhere in that range, and turn around and sell a 175, 170, somewhere in that range. That should be a good trade to the downside. The other one that I really liked as far as the downside was, I think it was Apple, because we're running into this resistance here. We've already rejected it twice. We get back up towards that equality right here in this range. So we get back up to the shelf at like 272. That's another bull put spread, which is pretty solid. But obviously it's not there yet, so it's not on my radar, but those are going to be the names. Unless it's like a perfect setup, I don't want to chase it because there's also just as much noise out there. JP Morgan put out a story today that we could see a 2 to 3% pop in the markets as soon as we have a ceasefire or we know that the war is ended. And that's just an outlier. Just like we know it's just that kind of news, it can wipe you out. It's better off. I mean, it could just take a trade to zero if you're on the wrong side of those. So in my opinion, you're better off sitting on the sidelines until we have the setup. Once we put ground troops into Iran, regular militia, not special forces, right? Then I will be posting a number of other names specific that we want to go after the short side. Then we want to go after defense too. Because once that kicks in, we now are in a prolonged war without question. And because when our troops have landed, we've never pulled them out. Never. So that that is just my mindset is I don't think the war stops here because Trump is trying to save face. So I don't think he quits. And I can't tell from Iran if the rhetoric coming out of there is accurate. However, with the tanker getting lit this morning, and then there was an oil storage facility that got hit, clearly the news that we heard earlier in the morning that Iran was done and had no firing capabilities just because of those two hits tells me that that's not the case. So that's my quagmire. There are two camps. Iran is done. They can't hit us in any way, shape, or form. Or is Iran not done and they can create absolute havoc and we have the Middle East burning, and I can't remember what year it was, 1972 or whatever, where we had all the oil fields. Basically everything in Saudi Arabia was burning. And, if they are able or capable to start, just 2 fires a day, I mean, where are we at in 6 weeks? Well, the Strait of Hormuz is not moving. I mean, we're not moving oil, right? Sri Lanka is already out of gas. Their vehicles aren't even driving because they've run out of gas. Right? Europe, gas prices have doubled. They don't have enough gas for the coming winter, right? India is going to have like 20 points hit across the board because they're so dependent. 85% of all of their oil comes from the Middle East. So, there are going to be sectors that absolutely get killed. And, in the debt wall and in the article that I posted, the oil hell that's coming, that is something that it's inevitable unless, I'm talking 2 weeks, it starts happening pretty aggressive. And, XOM, XLE are going to be some of the oil names. Permian Resources looks pretty solid, back up to about the 1618, about $20. Not a lot of room from where we are, but it could be a safe place, to come in and sell some call. Right here, I would move my confirming trend support to 1853 if you're in that. Right here to that wick takes you out, then I'd be out. But XOM is also another, name that should run. I'm not completely sold that the news I'm getting from Iran is correct. And that's my biggest quagmire, which I'm not, this morning I almost put USO on. And actually yesterday I almost put USO on. And now I'm kicking myself because I didn't. Because the bull call spread that I put in there would have worked perfectly because I was going to do a Friday expiration. And, but at this point, we get another tanker or two hit, we likely blow past 120 on crude. And the challenging part when you look at a tape that's this elevated is, we probably do get a 3 back up here, but I would rather chase XLE here. Let me just go to XLE than XOM because it probably has a little more upside from where we are, just looking at this number. So we've got this correction off of this leg. So this was our impulse. Peaking drive 1, 2, 3. We've got a correction that came back. Shelf held. We went right to the shelf. So the next likelihood is that this extends up to maybe about $60. It's got a little more upside than XOM. But Permian Resources is probably a decent play. Worst case scenario, you could sell cash secured puts on it, and that gets you on the right side. I don't like the idea of chasing VIX here. And I don't like the idea of, when I take a Q short and it fades quickly and I get stopped out of it, basically the market conditions are not conducive to get short. There's just too much of a range there. But that's sort of my ramble. Hopefully it was helpful. Any other questions? Bada bing, bada boom, bada bam. All right, folks. We'll see you next week. Great trading. Just try and stay out of trouble. When I see something that looks good, I'll pop it out there. Have a great day, folks.